The Egyptian Stock Exchange says it has cancelled the secondary EGX50 index after a survey of 17 companies, asset managers, funds and research centers showed that 94% of the respondents don't use or even follow the index.
The EGX50, which began operations in 2015, used to include 50 companies, 30 from the EGX100 and 20 companies from the EGX70. However, having many indices is not of benefit for investors. We already have EGX70, EGX30 and EGX100. That's why it was dissolved.
For years, the Egyptian Stock Exchange has been suffering from relatively low volumes of trade and listed companies. The fallout from the outbreak of the COVID-19 pandemic and the ongoing Russia-Ukraine conflict has kept investors away. This prompted the stock exchange management to tap new finance tools such as the Sharia Compliance Index to replace the outdated EGX50.
It was a very good decision by the boss to attract investors in this type of stocks. Most Arab markets have Sharia compliant stocks, and having this index will attract large companies and investors here.
Analysts say there's a huge potential in this sector. According to Standard & Poor's, the Islamic finance industry was estimated to be worth $3.6 trillion in 2021. This is as the relatively new Islamic stock index reached about $3.2 billion and is expected to grow even further thanks to the rising interest in the Gulf Arab bourses.
I believe this step will have a positive impact. We issued Islamic Sukuk bonds which were sold sixfold and were very successful, and therefore the Sharia compliant index will also be a success.
The Islamic compliant index is expected to be operational in the second half of 2023, though officials have not announced a specific date. Yasser Hakim for CGTN, Cairo, Egypt.